Hey everybody, so in this video, I want to talk about one of the biggest stocks in the stock market, and that's Apple. Now, with all this fear and just the amount of pain that we've seen in the last few days, a lot of you may be thinking about crowding into Apple when the stock price starts falling. And I just want to talk about Apple a little bit on the technicals and just what could potentially happen if we start seeing further sell-offs. So the one thing I want to note right away is we saw this death cross. Now this happens when the 50-day moving average crosses underneath the 200-day moving average. So this is a bad look. And we're constantly having lower highs, as you can see. So we had this lower high right here, and we have this support trend line, but right now I'm feeling like it's not going to hold up, just given the fear that we've seen in the markets. So if we do plunge underneath this support trend line, I think 121 could easily happen. And if we see 121 in the next few days, that is basically going to mean that Apple's trading at around 20 PE. And that's given the current earnings per share, which could easily change in the next earnings, which is coming up here in late July. So keep in mind that we're selling off this much without earnings even coming out yet. So if earnings do come out and they are a disappointment and we start seeing some really poor guidance, well then Apple is going to continue to fall. And that's something that you guys need to be careful of. So if Apple starts breaking down under 121, we could go all the way down here to 110. And when I'm looking at 110, this is an area where we had these little gaps right here and we had this tiny little shelf of support. So this isn't a very strong area either. Now, if we do break underneath 110, what I think could easily happen is that we could fill this gap right here. Now, there's this massive gap right here that's going from 95.22 to 99.63. And as you can see, we basically had this when we had this massive takeoff here in Apple. Now, what I want to talk about is where Apple can really find support. Now, I happen to think that Apple can find support right around that gap area. And the reason why is because of this 200-day moving average on the weekly time frame. So to get on that weekly time frame, I'm going to use this 5-year time period right here. So as you can see, we bounced off this weekly 200 moving average right here back in 2019, back here in 2016, and we came pretty darn close in 2013. We actually did this double bottom right here, and you can see that we came so close to that. Now back here in 2013, Apple really was not worth as much as it is right now. So Apple's come a very long way. Now there's something else that I want to look at. Now I'm looking at revenue and profit, and I am on macro trends right now. So if I'm going on this revenue and profit, we're always comparing to the prior periods. So when we're looking at revenue for this period and we're looking at this in a 12-month time frame, well then it's 386 billion. But what are we comparing this to? We're always comparing this to the prior year or the prior quarter. So if we're comparing this to the prior year, then we're basically going to look at 3-31 for 2021. So we're comparing 325 billion to 386 billion. Now, when the next quarter comes out, we are going to be comparing revenues for 6-30 2021, and then we're basically going to be comparing 347 billion to whatever revenue that we're going to have for this next quarter that's looking back at 12 months of information. So this kind of gets dangerous as we continue on. So if we're trying to compare like a year from now, we are going to be comparing with this revenue right here, which is 386 billion. So if we don't outdo this, then what does start happening is that we start seeing negative year-over-year growth. So this starts looking pretty bad. And then what could happen is that, investors might assess Apple stock and they say, well, we don't really think it's worth 20 PE anymore. We think it's worth 17 or we think it's worth 15. So that's when you could really start seeing pain. Now I want to look at something else. We're going to look at net income. So when we look at net income, Apple's been doing consistently well around like this 55 to 60 billion. But recently, I mean, we've been getting 101 billion, which is basically 102 right here. So we've almost like doubled our net income. Now, this actually puts Apple in a pretty good position because, during this time, they were able to spend this money on share repurchases. They increased their cash holdings. This really puts them in a better position financially. So here's kind of the good news that I want to talk about. We're going to go to their shares outstanding. Now we're going to go all the way back here to 2013. Now look right here. We have 26.5 billion. Here in 2022, we have 16.4 billion. So Apple has bought back over 35% of their shares outstanding. And to me, that is very, very impressive. And it hasn't even been 10 years. It's been like 9 years, and they did that in 9 years. So Apple is basically the king of buybacks. Now I'm going to show you one more thing right here. Now I got this nice little Excel spreadsheet that I built earlier this morning. And essentially what we're going to talk about is the amount of shares that they're repurchasing and the amount that they're spending. So starting with 2019, this is the full year. Now in the full year, they spent 67.1 billion in share repurchases, and they were able to repurchase 345 million shares. Here in 2020, they spent 72.5 billion. They repurchased 917 million shares. Here in 2021, they repurchased 85.5 billion in cash, and then they were able to repurchase 656 million shares with that. Now here, as of 2022, they were able to repurchase 266 million shares, and they spent 43.3 billion. So they're spending a little bit over 20 billion a quarter here. Now I do want to talk about what they have to purchase going forward. So I have this highlighted right here. So it says, as of March 26, 2022, the remaining availability under the program was 17.6 billion. Now, if we just stop right there, we'll say, uh-oh. But then look right here. On April 28th, 2022, the company announced the board of directors increased the program authorization by 90 billion. So now we have over 100 billion to repurchase shares going forward. Now, they don't have to use all of this, but if we're just looking at the trajectory right now, they're likely going to spend around 20 billion per quarter. And that actually puts us in a good situation. So if Apple stock continues to fall, what actually happens is that if they're spending around 20 billion a quarter, they're able to purchase more shares because the shares are cheaper. So what this does for us is that it actually increases earnings per share because the denominator, which is the shares outstanding, gets smaller and smaller as they are repurchasing shares. So this is a good thing. So in the shorter time frame, maybe Apple for 1 or 2 years, maybe they start reporting weaker earnings and, their net income isn't as strong. But during this entire time, they're going to continue repurchasing shares. And when Apple does start making those high revenues again, and they do start really increasing their net income and the state of the economy starts getting better, well, then what's going to happen is that, they're going to have higher net income and they're going to have fewer shares outstanding. So the earnings per share number is going to be bigger. So what this means is that, for the next few years and maybe the next few quarters, we're going to see a lot of pain in Apple. It's going to be painful being an investor in Apple. But, if we just stick around and if Apple can kind of outdo themselves, if they can outdo themselves in revenue and net income, then what's going to happen is that earnings per share is just going to come in stronger. And we're going to see higher stock prices. That's what that equates to. Now, I hope you guys really enjoyed this video. And down in the description, I am going to leave this Excel sheet for you. Now, this Excel sheet also shows all the prior years and this information, where I got this information. So you know that I am not making this up. This is actual information that I am going into the 10Ks and into the 10Qs to actually pull all of this. So I hope you guys enjoyed this video, and leave a like, a comment, a thumbs up, or whatever, and have a great one.